good, everybody? Welcome to the Closing Beat. Happy Thursday. I hope you're having a good day. You know, it's been hard to say that every day. Every day this week, the markets have been lower, and this is a quick show that we do to sort of update you on the stock markets, how things are going. We kind of gear it towards our customers as well as those of you that are active traders as well. We're financial advisors, so while we don't trade the day-to-day action, we like to keep you updated on it, maybe teach you something in the meantime. Hopefully you do enjoy it. If so, maybe check us out at jazzwealth.com or hit the subscribe button at the very least. Really appreciate it. Okay, well, first of all, if you're one of our customers tonight, Wine and Wealth, you should have got the email earlier today. It's going to be a good one. We're going to get really detailed about sector performance, historical performance. We're going to put up some data for you. We're going to go a little crazy, and I may even do just a little something extra there. We'll see what we can accomplish, of course, tonight. All right, here's the deal. Monday, if you watched our show here, you know that we talked about the number of stocks in the S&P 500 down 20% or more. And it was actually 137 of them on Monday. On Tuesday, it was 148. Yesterday, it was 150. Today, it's 166. 166 names that are lower in the S&P 500 by 20% or more. Did a little research. That's the fastest move from from the fastest increase since 2015. So it gives you an idea of sort of how fast the markets are pushing, like how aggressive to the downside this really is. It's just happening faster. We've had plenty of pullbacks from highs being 20% or greater, but they took a little longer. And there were little moments in time where everybody got some hope and thought, oh, maybe that's the bottom. And then, you know, a couple weeks pass and then we'd sell off again. And then a couple weeks pass. So you get the idea that this is sort of the ripping off of the Band-Aid approach there. There are 245 names in the S&P 500 down 10% or more. That's a new record for this year. And 213 of those names are down 10% in just the last month, going back only 30 days. So the speed of this decline is now very, very apparent. Now the markets, we're going to pull up the charts. We're going to dig right into it here. Well, you can see on the right there, Dow down another almost 2%. The S&P lost just about the exact same amount yesterday. Yesterday was like 39.48 or something like that. Today it lost exactly the same amount, let's just say that. And the Nasdaq was down just over 1.5%. Not good. All of them making new lows, all of them being down. You've got the Dow down now 5 days in a row, losing 7% in just that period here. I'm going to switch over to the charts. We'll just take a look. If you're following on any kind of a chart, I use candlesticks. I just have fun with those. But if you're following on any chart, you can look back and go, oh my gosh, here's 5 days in a row we've fallen. It's lost over 7% in just those 5 days. So just over the last 5 days, 7% off the Dow. That gives you an idea, again, of how fast things are moving. The S&P is now 6 days lower. I'll pull that up for you. Of course, new lows today. It's coming off those lows as we speak. So probably Nike, if you happen to see Nike's earnings, helping us come off these lows. And the Nasdaq lost 108. That's a bear market there officially, also making new lows. Ouch, right? Like really ouch in the short term. Very, very painful to watch. Now tonight we're going to cover a lot of that. I'm going to go into some other stuff there, try to help customers going forward. You know, I've been saying all week in here, if you have a 401k at work or whatever, you run towards it, not away from it, contribute more. I'm going to give you some good examples tonight in our class of exactly what you can do and when to do it. Okay, let's take a look through some of the areas of the market. Oil, the crash continues in oil. I think it's time to start calling that a crash, right? So look at the high, from high to 52-week high to 52-week low. That's the fastest ever in history. 30 days that it took to go from 52-week highs to 52-week lows, and just can't find any more support. Nothing. Every day when it tries to bounce, it gets sold off. Every day it tries to bounce a little bit again, it gets sold off. The price of oil, anything energy related, if you're participating in an index, the S&P 500, you got some energy in there with the rebalancing and everything. Yeah, that's a real struggling area of the markets there. So just incredible, that move in oil. Anything energy related, almost everything energy related took a little bit of a hit today. If we keep moving on, gold. So gold had one of the most impressive reversal days and even what's it been since October, right? Oh, you can see the charts. I keep forgetting you guys can see. So back here, this was an impressive reversal day if you're following the price of gold. It's kind of sloshed around, not very much excitement. You had people moving money thinking that this is the safety trade. Today was a big reversal of that. This tends to, a big bullish day for gold tends to signify a short-term bottom in the market. So many people think, oh my God, the markets are going down, the economy is going down, let me move to gold. That's a horrible decision. To be honest with you, I had a customer this week that said, I just want to invest all in gold. And I said, no, don't do it. Now, I want to invest all in gold, and Dustin, I'm going to invest in physical gold. And I went through reason after reason, but the person wanted to do that, and so they're on their merry way to a area of the market that will underperform and disappoint. I can only say it so much. At semiconductors, new lows again. So look at the bulk of anything in the S&P. It's just getting clobbered. So there's nothing nice that I can say about that. I can't sugarcoat it and say, it's going to be okay. The only thing nice that I can say is this extension in the short term will produce a bounce. It happens every time. It's not like an opinion or anything, but it will produce a bounce. You will get a recovery out of the S&P and the Dow. Personally, I was kind of thinking it would start it already. Looks like Nike is going to be the savior here for the markets to try to pull things back higher. Let's look at a couple individual stocks. I'm looking at anything you guys want to look at while we're at it, but it's not going to look very good, just so you know. Altria Group. So Altria has invested like $13 billion in Juul. So they're the e-cigarette maker. That gives them a valuation of $38 billion. Way too much. Way too much. But that's what's going on over there. Altria down 20%, always seen as like a defensive name, right? You buy cigarettes, everything will be fine, people are going to smoke no matter what the economy does. Clearly not the case in this sort of environment, so it really gives you an idea of the beatings are really beatings out there. Very hard to find anything good to work with. If you like the pot stocks, I'll bring it up real quick. Tilray finished up 10% today. They got a research partnership with InBev, which is Budweiser. So think of Budweiser as that everybody recognizes that name. They're going to be working with Tilray to do research on non-alcoholic drinks that have THC and CBD in them and everything. It's a $100 million partnership. Each company is going to equally chip into the pot. Well, Tilray doesn't have $50 million to put into the pot. They don't make any money. So actually one of their subsidiaries, High Park, is going to be contributing to that. So it's really a misleading sort of statement there, but I wish them well. That's what it is. Walgreens Boots Alliance, they had earnings. Most everything was decent with their earnings. They even announced a $1 billion cost-cutting program. Stock sold off down to the 200-day moving average. Investors tried to buy it there. Walgreens clearly, you want to talk about a beating. Look at that one. Everything was looking fine on that one and then just erased. What is that? September, October, November, so going on 4 months, let's say 3 months worth of gains erased in a matter of days. Not over the long term, days. Oh, they also partnered with Alphabet to help reduce healthcare costs. They're going to do a whole deal there. You can read into it if you like. The company that Alphabet owns is called Verily. Did I write it down? Verily or Verilify or something like that. So they're partnering up with them. That's pretty cool. Bitcoin had a decent day today. First day that it poked above 4,000 in over 2 weeks. Don't know if that's interesting to you. If you follow those Bitcoin things there. Is this the beginning of this thing sneaking back up into the news? We'll see. Twitter down about 11%. Was a little worse on the day. Citron, a very popular short-selling analyst firm, said nothing good about this company today. They said that investing in Twitter is toxic. They referred to the way that they treat women on the platform as the Harvey Weinstein of social media. There was nothing good about what was said about Twitter today. The stock sold off basically right away when that news came out. Just some guy's opinion. Well, research that they did. BlackBerry, that's still a company, by the way. BlackBerry did well. So they had earnings come out, earnings better than expected, revenue better than expected. Their automotive services division was one of the driving factors for that. So if you wonder, like, why don't I have a BlackBerry phone? They're focused elsewhere, mainly software, and it seems to be going well. That didn't seem to grab any of the headlines there. Oops. Okay, you got Herman Miller. the office furniture maker, very pricey office furniture maker, reported earnings better than expected, revenue better than expected. Pretty much everything was good. Even this quarter, they're expecting to sell a lot of overpriced furniture for the holiday season, so you guys can do that. On the flip side of that, you got Pier 1 losing half of its tiny little value today. The stock broke below $1, and then it was just collapsed from there. It's down to 47 cents. Pier 1 Imports, the store. So the CEO left the company. The board says, we're just going to sell. We're going to find someone to buy this thing. So that's what they're working on there. Elsewhere, Nike reported earnings. Like I said, that's going to be your Dow savior tomorrow. So if everything holds up that way, the Dow has already shaven off half of its losses for the day after hours here. So big, big reversal in Nike, which could change the sentiment even for just a little bit to get a temporary bounce, which you will see. So if you have those IRAs, you have those 401ks, you're playing around in the markets, maybe you're trading the markets and you're having a rough time with it, know that it's going to change. It's not going to be great, right? But know that it's going to change. Tonight, we're going to cover that on Wine and Wealth. Our customers know from the emails that I send out with the stats how this is not going to just recover, right? So every other advisor, you know what they do? There's a friend of mine that's an advisor for a big company. I won't say the name, I guess. They leave. He's left on Christmas vacation. And they have the receptionist take the calls because they don't want to answer the calls from their customers because they don't have anything to say. So he's left. He's gone out on vacation. So other advisors do that. What I like to do is dig in and say, okay, guys, I know it's not good. I know the market doesn't look good. Everything looks rough. How much more of this can we expect? How much worse can it get? How can we position? How can we adjust? I want to dive in. This is what I love to do. I'm here every day, all day. So tonight we're going to dig a little deeper into that. If you're one of our customers, I hope you'll join us. If not, the video link that you have in your email, that'll just do the replay. Whenever you have a moment, I will keep it short, I promise. But if you have a moment, come join us for a glass of wine. I know it's a busy time of year, by the way. I thank all of you for watching here that are watching. If you have any questions, I'm happy to answer there. Crazy how someone's financial investor, especially Citron. So that's interesting. And maybe that's where we should be investigating. By the way, the SEC is starting a study on the effect of exchanges paying for volume. You know how Robinhood makes money? I did a video on that, exactly how do they make money? How can they let people trade for free? The SEC is starting a 2-year study on the effect of possibly how that stuff happens. Maybe not good news for those people. We'll follow up on it, of course, but that study, I believe, is going to start next year. I don't know how I got on that topic. Yeah, BlackBerry's still around. I wish they would make that phone with a little ball in the middle and the physical keys. The physical keys would be amazing. Can you show the performance of the Roth IRA aggressive fund you're selling compared to the S&P? I'm not sure my Roth IRA. So everything, the aggressive mix, I think is what you're trying to say too. The aggressive mix obviously is going to be getting hit there. What we talk about as far as our investments go is the speed. And so, Robert, if you haven't had that video, let me send you that, or let me know that you haven't seen this video, where we talk about the speed of the investments. If you want to move faster than the markets, it goes both ways. You're going to feel it on the downside, you will move faster. On the upside, you will move faster. I'm not sure if I answered or helped your question in any way there. Yeah, there's an oversupply of chicken, just like oil. Apparently chicken prices have been selling off, and you might want to stock up for the Super Bowl if you do that sort of thing. Hey, I don't want to hear it from, Buffalo Wild Wings this year. You know how they always complain that there's not enough supply and they have to pay too much, and it comes off their earnings and they typically get a little bit hit. So I don't want to hear it this year because there's too much chicken out there for sure. What do we think of Apple? Obviously beaten down. It's no exception to the recent sell-off in the markets there. You want to look at valuation. If you're one of those fundamental traders, look at Apple and try to make the argument about valuation there. The S&P, by the way, the overall the PE ratio historically on the S&P is starting to approach 2010 areas here. So if you're a valuation investor and you like to buy things at a discount, not price-wise, but company value-wise, Tilray would not be one of those. then you might start taking a look at that. And I would also make the same case for Apple. I get it that the price has sold off and everybody's kind of feeling the pain there, but from a value perspective, is this area not a decent price for Apple? You think the Trump administration? No, I mean, you could see earlier today the market put in a low. Oh, actually, you can see it over here. That market reversal right there about what is that, 2 o'clock? I can't see it anymore, but the market reversal there at about 2 o'clock, that was buyers just coming in doing their thing. So the Trump announcement started that sell-off, but people bought that. That was the first real promising sign if you watch sort of minute by minute in the markets. The government shutdown possibilities obviously don't help the overall drama. We've got a lot to deal with as far as negative news in the market. I believe a lot of this is the Fed adjustment. You've got the S&P rebalancing. You got pension fund rebalancing. You got investors with tax loss harvesting trying to do that before the end of the year. You have a lot of reasons for selling. You've got ETFs that are all of a sudden going to have to recalibrate little by little. You have investors, the DIY investors, much smaller portion of the pie, that are panicking and selling and will regret it, but you know that's in there as well. So it's certainly not helpful what's going on with the government, but hey, you got to take a stand. By the way, did you see the guy? It was a former vet amputee on GoFundMe. I think it's a record for how fast they raise money. He said something to the effect of, Americans will build the wall, we'll all chip in and build this thing. I think he's over $3 million at the moment. That I don't get it, but people have put money into it to support paying for the wall. So it certainly got a lot of attention, or is getting a lot of attention. Yeah, Trump was definitely a bull for sure. Definitely for sure. Aaron, time to buy bank stocks. Did you see today that bank stocks did hold up? Now, that's not saying a whole lot, but they did hold up a little better than they have over the last 7 days. Just a little bit. I'm not saying that's a sign to dive all in, but that might be the first little thing where you go, hey, they didn't really come after the bank stocks like they have in the past week. So that may be a good thing there. Tax loss harvesting certainly could be. Yep. Cool. Well, I think that's all I have for you. I'm going to get ready for our class tonight because I want to give you the good stuff there. Like I said, I can't control the markets. I can't sort of control what happens here, but what I can control is the data. What I can share with you is the data. When things are good, I want to share that data with you to let you know how things are going. When things are bad, I don't want to just be the guy that comes on here and says, you guys should invest, you guys should more. That doesn't make any sense. It doesn't make anybody feel good. It just seems wrong. So the goal for me, information. Let me teach you, let me show you all the research that we have found. It may not be good, so it may be a little bad news involved, but tonight I definitely want to go through that stuff because the more that you know, the better you feel. Look, when you learn to lay tile in your house or whatever, you felt good about it, and if you ever paid somebody to lay tile, then now you know how to get a good quality job done. I want to show you how things work, and so I'm really looking forward to tonight. I will try to keep it short, but we'll see. 7.5 million? Man, I just checked it like 10 o'clock this morning. I heard about it. I looked at it. It was at 7.5. It was at almost 3 million. Good grief. Wow. Okay. Well, hey, that's interesting. I'm going to wrap it up here. I appreciate you guys watching. If I helped you in some way, maybe you'll hit the subscribe button. If you are looking at your 401k statements, your IRA statements, your taxable accounts, and you're like, what? Like, what's going on? This is rough. I'm going to just tell it to you straight, but we got to see what to expect going forward. How has this played out in history? Is the world ending? No. But how do we look at this as far as moving forward? That's what we'll keep covering here. So enjoy the rest of your day. We will talk to you later if you're one of our customers, or tomorrow if you want to join us again. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.